Well, good afternoon. Good afternoon and welcome to another of our webinar Wednesdays. Number 58 in our series of managing your small business through the pandemic. Good afternoon. My name is Kelly Bearden. I'm the director of the California State University Bakersfield Small Business Development Center, or as we like to call it, the CSUB SBDC. And that's why. So I will be your host today, and I will be the presenter here on April the 21st, 2021. So let's get rolling a little bit on this. I'd like to thank our various sponsors that really make this possible, have made the webinars possible for us going back to when we began Webinar Wednesday in 2013. That is going to be the County of Kern and Mid-State Development Corporation, the CSUB School of Business and Public Administration, along with SBA and the Governor's Office of Business and Economic Development. Thanks for all of them and all of your support out there as we continue to weave our way through, hopefully, the concluding days of the pandemic. And as many of you know, as part of the Central California region of the Small Business Development Center program, we have various offices located throughout the 14-county Central California region that spans from the Pacific Ocean to the state of Nevada, down to the southern part of Kern County to the top of Mono County. So our office is located in downtown Bakersfield. We are still currently working remotely, but we are assisting clients with a variety of different needs. In addition to pandemic relief, people are talking about funding and startups again. So it's really, really exciting. We also have centers in the Central California region. If you're outside of Kern County, Inyo and Mono counties, we have them located at Clovis Community College up in Clovis. Also at UC Merced, all of the Opportunity Stanislaus, the Stanislaus Alliance as it was formerly called, in Modesto. And also located at San Luis Obispo at Cal Poly and in actually Salinas. So great number of centers and support out there. And if you have any questions, please seek them out. Other training programs that might benefit your business, the SBDC is here to help. And help we will tomorrow with, we're bringing back Corey Williams. And I don't know if bringing back is the proper phrase, but we had him scheduled last month and it didn't work. But he's going to be talking about the targeted EIDL program. But really, if you have any type of EIDL problem or question, or need resolution or need an answer to something, it's really going to be a great opportunity for you to get your questions answered to Corey Williams. And Corey is with the Office of Disaster Assistance for SBA, has been a great resource through this entire disaster over the last 13 plus months. And if you have any questions, EIDL Advance is what we're going to really focus on, the targeted EIDL Advance that's rolling out a lot of money to a lot of businesses right now. But also you could have a question regarding how, what's going on with your EIDL, or if you can get your EIDL up to $500,000, which is now the maximum limit. So a lot of questions you could have. And, go ahead and please check out Corey Williams tomorrow if you have any questions. And that is being presented along with the SBDC with Mid-State Development and the Kern County Black Chamber of Commerce and the Kern County Hispanic Chamber of Commerce. So today, April 21st, 2021, we're going to jump into a lot of the nuts and bolts of the Restaurant Revitalization Fund. Our rumor mill tells us that it is going to possibly open after a 7-day trial period, invitation only for that, and select number of applicants are going to be able to access the portal first. And we'll get into the nuts and bolts of that, but we're expecting, or at least we're anticipating, potentially April the 30th for this portal going live. For those of you interested in the Shuttered Venue Operator Grant Program, the portal will be reopening. That portal opened on the 8th of April and it closed on the 8th of April. And the contractor is working with SBA on trying to repair some of the issues with uploading files and a few of the other things going on. If you have any specific questions on this, I know that there has been really an extensive FAQ that SBA's put out a lot of the trade associations that are located in those particular industries where you have shuttered venues have been very supportive and helpful as well. But on Thursdays, I get the opportunity to meet with a select group in Washington in SBA, and I can ask specific questions that anybody might have on SVOG. Limited to SVOG right now, the Shuttered Venue Operator Grant. But if you have a question, that starts tomorrow at 10. If you get it to me before 10 o'clock tomorrow, if I can't answer it, if it's a very detailed or more specific type question, it's really good because they have a number of SBA experts in that particular room at the time. So please take advantage of that. Well, I don't know about you, but I like orange. I like orange. I like being able to see our restaurants at 50% of capacity now, and starting to see, reopening what it looks like and what it's going to hopefully anticipatedly return and continue. So I kind of like this orange situation, and numbers in Kern, even though we're not going to jump into that today, they remain relatively or actually super low. Low 3% range for actual percentage of population that actually out of per 100,000 citizens, 3% of those are testing positive right now to COVID. So whereas we're still seeing, that happen, it's happening at such a low level. There is some anticipation that potentially as early as May the 5th, we could be swimming in yellow. So keep your fingers crossed there. PPP, as we know, has been extended. The 2021 version of the Paycheck Protection Program is extended to May 31st. We'll have the funding update, and funding is actually slowed on that. And the loan average size of each deal is going down even lower. We'll jump into that quickly. Also, a little bit on the EIDL, but pretty much have said what I'm going to say on EIDL for today. Might maybe touch a few high points if we have a few minutes left on some of the slides, but really EIDL is best addressed tomorrow as far as any questions you have on loan size or anything else. If you received a denial, for example, now's a good time to ask that question, or if you had any other concerns regarding the Economic Injury Disaster Loan Program. Another one of our fine acronyms, the ERTC, the Employee Retention Tax Credit. And this has been a pandemic of acronyms, really, for at least the relief programs. And we had our local expert, Michael Stevenson, on a couple weeks back, and he discussed a lot of the things that he was seeing with 2020 with that employer tax credit, retention tax credit, and 2021 was opening for the quarter that just ended on March 31st. California Relief Grant. Hopefully some of you have now found out you've been funded. I got a call 25 minutes before we came on today, and another one of our SBDC clients had just got an email from Lindustry stating really a good time to go check your emails. I actually ran one through the portal just to kind of, so I would know the process. And I did hear from Lindustry that my application has been waitlisted, but I did get an email and check to see if you've had an email regarding the opening of the 6th and what appears to be the final round, which will open next Wednesday. So we'll take your questions. Please put your questions in the Q&A box. We'll take your questions for today, and we will move right along. As many of you know, the CSUB in Southwest Bakersfield is offering a mass vaccination hub. The hub's still open. 16 and over, everybody 16 and over can actually get one of the 2 first Pfizer shots, I believe they're given now. And you could book that at myturn.ca.gov. And remember, they are free. Walk-ins are welcome. And, appointments are recommended. But then again, we're seeing a lot of walk-ins that are being accommodated. So if you just want to drop in, stop by the campus. Okay, so what's going on with some of these or many of these key stimulus programs right now? We're seeing, of course, PPP is still open. Loan volume is still there. So if you have a need for the first draw, I think really what we're seeing, and the numbers are suggesting that with PPP, 2021, since it has been around longer than 3 months now. Most of you that were here or had questions earlier got in and you got funded. So that is reassuring. So, but there are still many that really don't know about the program or you know, for whatever reason, haven't been able to get in at this time, and there's still time. We still have, it looks like it might even go till the end of May, which is still a little over 5 weeks out. So if you have a need for the first draw or the second draw of your PPP, contact your lender is a good place to start, or you could contact us. And if you don't have a lender, you know, or maybe you're in between lenders, a good place to start is your local community banks and local credit unions, your smaller entities that have really put a lot of heart and soul into their communities in order to make these types of program work. And locally in Bakersfield, we're talking about institutions like Valley Republic Bank and Valley Strong Credit Union, to mention a few business. Yeah, some of our other business banks are actually doing it as well. So as far as the venues, we talked a little bit about that. There's 16 billion, not a dime has gone out. The portal is reopening soon. I hear the portal could be open as soon as Friday. I will know more of that, but for those that have been waiting to get part of that Shuttered venue operator grant and the 16.5 billion that's with that. So that's going to be opening soon. Mentioned a little bit about the California Relief Grant Program. The portal, if you haven't been waitlisted or you haven't found out that you have been actually successful in one of those $5, $15, or $25,000 grants from the state of California, the portal will open next week. We'll talk a little bit about that more next week. Many of you have been waitlisted. Many of you that have been waitlisted are finding out now that you're being funded. So with 724 million available in that last round, that's a lot of money going to a lot of small businesses in California. We're going to focus a little bit on the Restaurant Revitalization Fund that we think is opening relatively soon. The Employer Retention Tax Credit is 2020 is still open. 2021 for the first quarter is open. The EIDL loan program is open through the end of the year. The benchmark standard U.S. Small Business Administration Economic Injury Disaster Loan, and that is open until the end of this year. The EIDL Advance, where they are going back and looking at actually funding a lot of the businesses that received an EIDL Advance before you received your full EIDL in 2020, and topping off your tank to $10,000. So they're going to continue to do that. The city of Bakersfield's Restart Loan to Grant program is open and taking applications. Recall that is a program for up to $50,000 based on $2,500 per employee that you have. And accesspluscapital.com is a place to go put your application in there. So pretty straightforward program. You have to stay in business a year, and it goes from a loan to a grant by staying in business for 1 year. The PPP forgiveness. PPP forgiveness numbers continue to go up, and we're going to be back in this subject as a lot of you are starting to now question PPP forgiveness for the second round or 2021, and we're expecting more guidance on that relatively soon. So we'll be talking about forgiveness for those of you that got in a second time for PPP. And also the pandemic unemployment insurance is open until September the 5th. Okay, so what do we know about the Restaurant Revitalization Fund? Well, we know a lot right now. We've covered a lot of the kind of eligibility requirements over the last couple of weeks as part of this regular routine webinar. Our quote, though, really kind of comes right here where it says that by our estimates, we've lost 250 billion in revenue since the beginning of the pandemic. And that comes from the National Restaurant Association Vice President Sean Kennedy. And from March until June, that 10-month period, 110,000 restaurants closed nationally. So they really kind of focused on what we're going to go over in a few minutes, and that is the actual industry-specific solution, which we're seeing with shuttered venues, and now we're going to be seeing with restaurants where they identified areas that were of big need. But first, before we jump into the RRF, let's jump into our poll. I know some of you thought I forgot about the poll, or we weren't just going to do one this week, but now we got to have a poll. And so our poll is going to focus on a couple programs, or a program that we really haven't talked much about since 2020. And I'll launch the poll question and then read it for you. And it's, how familiar are you with the COVID-19 sick and family tax credit? You're either very familiar, somewhat familiar, or not familiar at all. And, you know, it was kind of a direction that we took here at the SBDC, where we were going to stick kind of to the financial pandemic relief programs. And this one kind of got a little bit over more into the HR side of things, the human resources. So whereas we've mentioned these programs, particularly when the 2020 version of it ended, we really haven't done much in this. And so this is just kind of a see if there's need to really get into this in more detail later on. So I'm doing a little homework right now. So thank you for jumping in and voting. We have 66% of you in. And again, the question, how familiar are you with the COVID-19 sick and family tax credit, which is a federal tax credit? And we're going to end the poll and share the results. And look at that. 83% of you are not familiar with it at all. 83%. And so what we see is 8% of you are kind of tied between somewhat familiar and very familiar. So essentially 4 out of 5 are not familiar with it at all. And so we'll get into that in a little bit, maybe next week, and talk a little bit about that. Just what you wanted, another pandemic relief program to talk about. So here we go. And on the related part of that, and maybe my question that should have gone first, is poll question number 2. And that is simply, have any of your employees taken COVID-19 related sick or family leave? And that's a simple yes or no. So have any of your employees taken COVID-19 related sick leave, sick or family leave? And actually, this was one of the NFIB poll questions, and we can kind of compare our results to theirs. And that was kind of the point in this one, was to see how locally or regionally what we're doing compared to nationally, the National Federation of Independent Business, with their survey. So have any of your employees taken COVID-19 related sick or family leave? We're going to end the poll. And the majority of you, by 56%, say no, and 44% say yes, which is kind of something that is flipped on the national level, with a higher percentage of that, I think a little over 60% in the yes. So that is interesting and something to note. Whereas it looks like maybe there is just more utilization of this particular program. And plus, I think a lot of people were getting confused with the state variation and the federal variation of the programs. And part of the reason why we kind of just had enough to talk about already. So, okay, well, thank you for participating in the polls. It's good to know. We will remember to pull up and make you a little more familiar with the family leave program next week. So quickly, just jumping through some of the stuff that we've covered the last couple of weeks. You know, it's $28.6 billion for the RRF, which we're going to call it, just because we need another acronym. Couple quick other things here before we move on. 20 or fewer locations, up to 5 million per location. It's a bankruptcy is okay. Originally, we were thinking you needed a DUNS or a SAM number, since it is a grant. There's the platform if you're going to be applying. And look at that, even more this week, more information. So there are set-asides in this program, and some of those are for very, very small businesses, and some are for social and disadvantaged economic groups. So those are going to be getting in the first part of this. It is, I think, important to get in the first day. You saw the reason that quote was up there, 250 billion, that is the amount of loss, and there's going to be 28 billion basically covering it with this program. This is going to be a very, very busy and high subscribed program. And whereas they will only fund those social and economic groups first, then it seems like they're going to go into a waiting list, a check queue, that if you qualify, it's when you come in. So really a day you need to be in. And another thing that we haven't really talked about much is that when you come in, you can actually come in, actually through your POS system, your point of sale. So if you have a point of sale and there's 3 vendors that SBA is working with, that might be the preferred option. And that is another way for SBA to take applications and another way for them to validate that you're an actual existing business. And it takes you out of going through the rigorous fraud protection measures that have been implemented in these programs. So you're going to be asked to self-certify that you're one of these priority groups. And, for the first 21 days, 51% owned by women, veterans, economic and socially disadvantaged groups, which includes people of color. Again, it's a self-certified process that you belong to one of these groups, but you will not need documentation to prove this, the presenter said, at least what we went over last time. So we know the eligible businesses, they go far beyond the restaurants. They go into other types of food delivery, your food stands and carts and trucks and snacks, your caterers. It gets into beverages with your bars and lounges and taverns and saloons. Even if you're an innkeeper, you can qualify for this program if you have 33% of your revenue in particular food business, a food business attached to the inn. So we also have breweries and brew pubs and microbrews and tap rooms and tasting rooms. There's wineries and distilleries. And then also, of course, we're going to have bakeries. So your good old bakery is going to be in there. And again, kind of the key for most of these are going to be that you needed to have 33% of sales on out of your location. So you needed retail sales of 1/3 or 33%. A number of things will disqualify you: shuttered venues, etc. Public traded entity. You can't be a state or local owned government program. Can't be permanently closed, and you can't be liquidating under bankruptcy rules and laws. So before we go into shuttered venues, let me make a new share here, and let's go into the SBA website on this particular program. One thing that's kind of interesting, and I found kind of nice, was all the different languages that SBA has supported. So they're translated documents into Spanish and Chinese and French and German, and then some I can't even pronounce, and some I didn't even know that were languages, such as Haitian Creole. Man, that'd have been a good poll question. I could have got you on that one. Of course, you would have known about Japanese and Italian and Korean, and some of these other languages such as Russian and Vietnamese and Portuguese. So a lot of languages that it's going to be available in to get down to those smallest and neediest mom and pop businesses that we continue to seek at the SBA for PPP loans, and now also for some of these other programs. So that's where you find the form 3172. It's not going to be a paper form that you file, but the SBA they're advising that people actually fill that form out when they go into the portal. And you're going to want to get into that portal and get out as quickly as possible. It's likely it could crash again. The demand for it is going to be enormous, to say the least. And so with that in mind, there's going to be a lot of opportunities for your particular to jump in and jump out and get your application in. So again, I wanted to kind of stress that SBA does have some POS restaurant partners. There's 3 of them. I can't recall exactly who they are right now. So tell me, SBA, come on. But there's 3 of them that they have preferred POS vendors. So your point of sale can actually work for processing, the sales that you have had over your particular business. So This is the application guide, which I'm showing you from page 10. And let me scroll to the top up here. It's a good document if you're going to apply for this funding to go through. Answers a lot of questions for you. And it's been updated as of yesterday, so it's fresh. And there's your table of contents. It'll get into more detail on the eligibility issues. We're going to go over some of the funding opportunities that you have in funding grants, but just a lot of information right there in this particular Restaurant Revitalization Funding Program Guide. So jumping over now over to this, and this is the form, the infamous form 3153, I believe. So, and this is an SBA form, not an IRS form, an SBA form. And it talks a little bit about it at first. Let's kind of go through these 16 pages quickly. So, and then we'll go through an example. So first it's going to be your contact information. So if you have a business name, for example, if you're incorporated, if you're like Kelly Grill LLC, like we've used that example in the past, you would put that and then doing business as Kelly's Grill. If you're a sole proprietor, even though your restaurant could be called, the best darn place to eat in town, you're going to put the name of your first and last name, so if you're a sole proprietor, and then put the doing business as or your trade name that you use and go under. Straightforward is your address and your taxpayer ID number, which includes EINs, SSNs, and ITINs. As we're finding out with a lot of the ways of preventing fraud in the programs, there's bank information, and SBA will check to see if you have a checking account. They'll check to see if you have a particular tax account, and they'll pull that information. Here you list just the owners of the particular business, and it's pretty simple: name, identifying number, address, and the percentage of ownership. If you have more than 4, just be prepared because you'll be able to add those into the portal. So then your form of organization, fairly straightforward. I think the one that most of us don't see very often is a tribal business, but actually does come into play in a lot of communities. And then you'll be able to respond to all of these questions. So you'll get a number of questions, as of what, and these are good to go through at the very beginning. So the applicant's business is a state or local operated business, yes or no? If yes, it tells you you're not eligible. So you can jump through these questions and talk about, again, remember, what we get into with so many of these is this one right here that we've talked about, is that if you're a distillery, it requires on-site sales to the public of at least 1/3 of your receipts. And that is going to be true with bakeries and breweries and wineries and many others that have a large wholesale component to their business. So I think that there is a need for that wholesale component, because in many of those cases, it dropped substantially as well. They've made it clear that these are going to be for on-site businesses that were closed and really couldn't generate many sales because of the nature of government orders shutting businesses down for 7 months, or at least shutting down the inside component of it. So then we'll get into, is the applicant's business permanently closed? Because you can't be permanently closed. Or are you in bankruptcy? The next couple of questions deal with if you receive PPP, gets into affiliates. Generally, when I work with businesses that have affiliates, they know what that means. So let's just say you own one restaurant and you own 51% of another 3 cities away. Those need to both be considered into this one application. Is the applicant operating as a franchise, and is it under the SBA's franchise directory? For those of you that don't know, the SBA's franchise directory is kind of an approval list of franchises that they have vetted, and they do actually allow SBA lending into. If you are not in the franchise directory, you're not an approved franchise of SBA, you cannot get an SBA loan for those particular businesses. Now, I'm thinking that could be different. It's going to likely be different under this program. But if you go through your traditional SBA lending programs, your guaranteed loan, your 504 loans, et cetera, your SBA lending that is done, is that you have to fall in this. But I'm not really sure yet on this particular program. I would say no. And that's the best guess I have. One question they asked that I really liked is, what date did you begin making sales? Because a lot of people, that differentiates if they've changed their business entity. For example, if they've gone from a sole proprietor to an LLC, and they might have done it during the pandemic, they might have done it before the pandemic. But this lets them know that just because you've changed your business entity, that you were in business when the pandemic struck, and that's what pretty much comes down to. Then we're left with 3 tables here, and these tables are used. They're different calculations tables. They're based on when you were in business, when you were first in business. And table 1 will be the most common one. It'll be for applicants that were in operation prior to or on January 2019. So we'll go through an example of this momentarily. But right now, you put your 2019 gross receipts in. And then it comes down, you put over here your 2020. You do not include any of the pandemic relief programs in your gross receipts for 2020. So you have, for 2019, you have for 2020. Here you do list your PPP first and second draws. Only PPP first and second draws. And then you add those 2 together and you have your sales in 19, you have your PPPs in your 20 sales, and the balance is going to be essentially fall down and in most cases be the amount of the grant that you are entitled to. So there is a $5 million maximum, and that comes into play right here. And there you go, 2019. You're in business before 2019. Pretty straightforward. Again, I would have every one of these numbers in. I would have everything checked and double checked. A typo could cost you potentially this grant, and you have to remember that going into it. So have everything ready. You have time once you're in the platform, get everything right and double check it. So table 2 is a calculation of funding amounts for applicants that began partially through 2019. So if you had the great fortune of opening in 2019, and let's say maybe October 4th, 2019, and maybe you opened, and so you're essentially open for 3 months, you would put on line 1B the number of months that you were in operation. So what you would have is you would have your total sales for 2019 for those 3 months, divide it by 3 to get your average monthly gross receipts. And so then you would actually use that and carry that down against 2020 numbers. And again, you do not include any Paycheck protection program or any of the other pandemic relief programs, an EIDL advance, a Kern Recovers loan. You don't include your Kern Recovers loan or your BCARES or any other that you got via CARES Act or any other source that was provided to you. So we have that, and then actually moving to box number 3 is the total amount of PPP loans. So again, you will deduct your PPP loans, and we'll move on through this, and we'll go through an Excel example of this. This is a good example and way to see it, but essentially you're going to be able to, if you went into business in 2019, you're going to be able to annualize that over the entire year and then subtract your 2020 amount, and that'll be the size of your grant. So, and these are a lot of the questions that came up early in the PPP process, and it's good to see that SBA has really done a fine job of getting all this ironed out before there's going to be an issue. There's going to be something that happens, as with the Shuttered Venues operator grant, but it looks like they've gone out of their way to do painstaking detail to try to find out what those issues are going to be. And so we even get into table 3, which is those businesses that began operation between January 1 and March 10th. And if you had not opened by March 10th, again, the key word there is began operations. I would begin operations by thinking that you were opening and selling food to the customers, the public. That would be my definition. So you were open by March 10th in 2021. And see, that's kind of the key there, March 10th, 2021, because this part of it is going to actually help you with some of the costs that you incurred in putting your restaurants together. So again, a lot of the same information, and we'll go through a detailed analysis of this. Again, your targeted uses are actually showed here of what you can actually pay for these funds for. And again, a lot of it is for working capital and other needs that you have in operating the business. And again, the priority. So the application process goes into a lot of the things that we've just talked about. You will go through the self-certification like you do on all of these. And again, the key there is you are attesting under penalty of perjury that current economic uncertainty makes this funding request necessary to support the ongoing or anticipated operations of the applicants. Okay, so that's the application, and it's not much more left. That was the main part of it. Straightforward contact information, easy calculations. And now let's look into some of those easy calculations. So we were fortunate enough, we had a gentleman, Frederick Leibowitz, who actually created this for us. So thank you, Rick. Appreciate this calculation. And this is the first calculation. And so let's just kind of go through this kind of quickly. We kind of shared the documents back then or the details, but there's your 720 that you had as far as gross receipts in 19. Your sales fell to 300,000, as mostly those were to-go sales and maybe a much less dining room that you operated. You received PPP loans to the tune of 140. So you add that together with your sales from 2020 and subtract it by 2019 to get 280,000. The maximum there is $5 million. You're not over the $5 million, you're 280,000. So that number falls down here to the amount of your funding request. Table number 1. Only difference is if any of you had sales that were maybe 10 million and then they dropped to 3 million and you were over this 5 million, you were at 5.5 million or 6 million or 7 million. The most that you can claim is 5 million here on the bottom line. So table 2. Table 2, again, this is the partial year for those businesses that had a partial opening. And looking through this is that we have our gross receipts that reported on our tax return. Here we have the number of months that were 4 months. So we were open for 4 months. So instead of, that would be around, if you opened at the end of the year, September 1st, and we're open through the end of the year. And in 4 months, you did $320,000 in gross receipts for the restaurant. You're able then to take 80,000, which is your monthly average gross receipts, and multiply that by 12 to get 960,000. And then again, we do the same process that we looked at earlier. The gross receipts that are going to be reported or were reported on your 2020 federal tax return. So this is another example. We've had a couple of them earlier, including with the PPP, where you can actually have not filed your 2020 federal tax return, but use the data that you intend to file. Now, again, I know I've said this several times, and I'm going to say it again. You really need to have that 2020 done and accurate if you have not filed it. So if you're waiting for some other reason to file it for later in the year, make sure that your federal tax return, either your Schedule C as a sole proprietor, or your federal tax return for any of the other entities, such as an LLC, corporation, etc., Make sure you have those numbers there and correct. You'll really save yourself a lot of troubles. So there we had between 540,000 in sales in 2020 over 12 months, and then actually we had received some PPP money to the tune of 140, 680,000, and wow, ironically, it came out at $280,000 again. Now this doesn't mean yours is going to be 280,000, and to prove that, let's go to table 3. So this is a business that actually, and again, it can be for those that were open during this brief period of time, and for those who had not opened but had incurred eligible expenses. So again, your eligible expenses that you spent, $85,000, and again, that will fall through and be the amount of your grant. So I'm still waiting for a little more guidance on table 3, but it is a new aspect of it, to where, as we've always worked with this hard and fast cutoff of when the pandemic happened, of businesses that can actually apply for pandemic relief. Whereas this situation, the SBA is saying, hey, these people in January started renovating this restaurant and incurred eligible expenses. And we looked at the eligible expense list. So you might not be able to get into equipment and leasehold improvements in that, but there could be eligible expenses as far as other expenses in there. But the SBA has said, hey, it's not really right that these people have just been left out of everything, when the pandemic really, shattered their opening that was going to be a few months after the pandemic started, etc. So this was their remedy for that. And then the last one, it's just something to be completed by all applicants, table 4. So that's what we have on the restaurant revitalization. Decided just to throw a little PPP information here for you, have a little bit more as we go. We are up to now $240 billion. And this is just kind of a breakdown by lender type. I continue to be really surprised and amazed at the breakdown here between the larger banks, average size of 68,000, and your smallest, very, very small fintech that are running around in small business lending companies, 19 and 20,000. But let's go back to the slides now and just jump into a little bit more of Shuttered Venue before we leave this. Again, the applicant user guide has been updated in the FAQs. If you're looking at Shuttered operator venues, check the website. I will know more tomorrow. And if you really want anything specifically ask about the Shuttered venue operator grant, send me an email at kbearden@csub.edu. I will ask that question tomorrow. I will also get a better understanding of when the process is going to open up again. And the word on the street is it could open up as soon as Friday. I haven't seen anything online that suggests that. My comments are just coming out of what I heard on the call last Thursday. So we'll know more tomorrow, but it's another program in addition to this restaurant program that if you want a piece of the pie, or here if you want a seat for admission, and those are puns, not good ones, then you better get in early, and you better get in once, not often. Get in once and get in early. Okay. So again, I think most people know that are really into this grant. They know the staggered opening as far as how big of a loss will be served first. And as far as the priority, it goes on the greatest number of greatest value of your loss between 19 and 20, which brings us to the California Relief Grant Program. And, I probably will do another poll down the road on those of you that had been waitlisted and now that you've been funded, because I know it just keeps coming more and more. Originally, I think our number was at 15%, and I was anticipating as many as maybe 2/3 or 3/4 of the applicants being funded by the time that program's over now. And those are just my best guess, because I like to do that. So we'll kind of see where that ends up, but it's coming fast and furious. And there's another $750 million round that's coming up from April 28th. For those that aren't in yet, if you're already in, you don't need to reapply. Just make sure that you go in and you check that your status is currently still waitlisted and that your application is being considered. And again, you'll receive either a $5,000, $15,000, or $25,000 grant if selected based on your revenue. So again, apply once as far as some of these tips. If you can, use Google Chrome if you're just getting in now for the first time. Again, that portal won't open until next Wednesday, but it's good to get your information in or get it ready and to get ready to apply. Or if you're going to assist somebody else in applying, it's good to help them also, and just get in and jump in and know it's best to use Chrome and to use incognito mode in Chrome if is also kind of one of the suggestions we've heard too. And there's also a required pop-up in the application. So make sure that you allow pop-ups, and you're able to allow pop-ups, use Chrome and other things. So, we can't get through one of these Webinar Wednesday, without a PPP component, because we've had one since, webinar number 2. So let's do our PPP due diligence and kind of go in and see. We're still looking for the smallest and neediest businesses that aren't in yet. We have first draws and second draws that are available. Our summary of the money, our money is now up to $240 billion, which leaves about $44 billion. The average continues to fall. The number of loans goes up. The average comes down, and the net dollars approaches that $284 billion to when the program is out of money. So still about $44 billion. And then this last week, just $7 billion. $7.3 billion went out to 321,000 approved loans for the week, which is an average size of 22,911. So I think what we're really seeing is a lot of people who couldn't participate because they didn't have a profitable Schedule C earlier. So without that Schedule C and without that profit, they weren't able to actually jump in and do anything. It was the SBA's original goal, and I think what they interpreted from Congress was that the Paycheck Protection Program was there to actually protect your paycheck. And if you have a business that's not making any money, they felt you weren't entitled. But that all changed back on March 3rd. And now March 3rd, we go off of the gross income number. So if your business generated gross income, knowing that it's several factors that could actually jump up. So, one thing that we are seeing is we're not hearing anything, even though we have a lot of advocates out there that are seeking to make the Schedule C changes retroactively. Many of you that are Schedule C filers, and by Schedule C, we're talking about the profit and loss form in your Form 1040 packet, your tax return. So when I say Schedule C, that's what I'm referring to. And that Schedule C, those changes were made on March the 3rd. Well, we started getting PPP applications in January. So a number of you Schedule C filers actually applied and received your PPP. And then the changes came, which would have meant a much larger, for a lot of small businesses, a larger PPP loan. So right now, there have been a lot of advocates that are actually trying to see if Congress will go back and do retroactive changes in 2021 only for Schedule C filers that were in before March 3rd and were not able to take advantage of the full benefits of the program. So again, sole props can actually use, I call it here, a draft 2020 Schedule C. It should be your 2020 Schedule C that you're going to file. You just haven't done so yet. You can also use actuals for 2019. Some of the opportunities that we've talked about, and there are several because that's not where I want to be. There are several because if your business, had 0 employees and had a 25% revenue drop and net loss, now you're able to apply. Some of the other things, if you used a lot of depreciation to beat up your sole proprietor income, it's pretty good tax advice, and tax strategy toward the end of the year, or to purchase assets that your business needs that makes it maybe more efficient and more profitable, and being able to pay for that over a period of time, over the life of the asset, maybe 7 to 10 years, while taking that deduction all in 1 year. So that's a strategy that it's been an effective strategy for many small business owners, but for the PPP program, it meant that you were oftentimes left out. So just remember, if you're not in yet for PPP, there's still time. 60% of those funds need to be used on payroll and other uses, at least 60%. A lot of the self-employed individuals who don't have any employees use 100%, and that doesn't tend to be a problem in most cases moving forward. We are hearing of occasionally, and I don't have a resolution yet, but have heard of a couple of instances of where the lenders came back and said on a smaller PPP that they were overfunded, and so the entire amount is not forgivable. So some of those issues, when we start getting clarity on how those are happening and going through the forgiveness process, we'll bring those up sometime down the road. So the targeted EIDL. Gotta love the targeted EIDL. Again, the targeted EIDL is the economic injury disaster loan that's targeted for low to moderate income communities, as defined by census tracts. And we've had the census map out several times. Don't have it today, but shoot us an email if you want it included, or maybe we'll include it in our resources this week, as we'll probably send out the Excel sheet that we had that you can use, and maybe a few other things to make it easy to find some of these restaurant resources. So again, one of the key things here is you have to have suffered an economic loss. You've had to be able to show a loss in your gross receipts of greater than 30% during any 8-week period. And SBA, usually what they'll do is they will ask for your monthly sales for over those 2 years, and consider a month to be 4 weeks and go about it that way. And again, you could not employ over 300 individuals. There were some questions and issues coming up on people, because with a lot of these programs, the SBA goes back and they check with the IRS as far as income tax filing status. And to do that, they have you sign a form. Well, we've talked about it before, form 4206T, maybe. Well, what it does is it just gives authorization for the SBA to pull your tax return through the IRS internally. So that happens a lot. So again, with this targeted EIDL, one thing, just be careful of fake communications. There's a lot of communications going out on this program now. I hear daily from people that are hearing from SBA, but just make sure and verify sba.gov. You can also call their 800 disaster line number that we frequently have had in the chat box. Maybe that'll be in tomorrow's chat box for sure on EIDL, but you can call them and verify that you're getting this correspondence from them. But there is still a lot of fraud that's going on out there. The deferral, but other things that you might have as far as EIDL questions that could be answered pretty effectively tomorrow would be things like, you have to remember, when you got an EIDL loan, if you have an economic injury disaster loan, not everybody who got a loan has the targeted grant. So the targeted grant went to a number of businesses, and sometimes they did not qualify for the EIDL loan, and it was considered forgiven. But if you got the loan, the SBA is in position with a UCC filing. It's the $100 that you spent that was less than to do that official UCC filing with the Secretary of State. So essentially, your business assets, even though they don't lien any real property, there's no real property and there's no specific assets liened, you do carry a lien from the SBA. And the SBA, when you dispose of any of your assets in your business, if you have an idle loan, you need to get that permission from the SBA. And that's important, and that is going to be an issue moving forward. And it's really, if you have a question along those lines, is another good question for Corey Williams tomorrow afternoon from 2 to 3 here with us, Mid-State Development, the Kern County Black Chamber of Commerce, and the Kern County Hispanic Chamber of Commerce. We'll be back next week and talking about the restaurant and some of the things that are going on, and back next week for number 59. But for now, let's jump in and kind of look at some of the questions that you might have. So let me stop my share. Okay. Applied for the California Relief Program during the inception. We're still waitlisted. So got into that early period in January, still waitlisted. My business is one of the hardest hits. You know, it's a travel agency. Do you know why the travel agency isn't the priority? I do not know why it isn't the priority, because obviously hospitality industry, which I think a lot of people associate that with being just maybe dining and recreation and other things. But really, yeah, you're right. The travel industry was devastated. And so, you know, in their requirements of businesses they fund and how they fund them, which I don't know exactly their algorithm, but what they do is they talk about the hardest hit businesses are the ones that get a focus. So there's still a lot of money out there. There's still probably $1 billion that hasn't been earmarked. And if you're waitlisted, one thing I would do is I would touch base with them in the next week just to make sure that there's not something wrong with your application. And also make sure you didn't put in 2 applications. You didn't put it in a couple of different areas. If you think you could have put in multiple applications, you need to go in and talk to them. I would call them directly on their 800 number and their toll-free number, and actually talk to them about trying to get that done. Please define covered period in relationship to the 10 months after that the forgiveness can be requested. Okay. Right after I take a drink, I'm going to do that. Good old water. Okay, so what we have is in forgiveness, we have a covered period. And initially, when these loans were made in 2020, the first batch that went out in April, you had a covered period of 8 weeks. In early June, kind of a fix came along to fix the legislation for PPP, and the option of a 24-week window was available for the covered period. Most people took the 24-week covered period because it gave them the opportunity to actually spend their money over a longer period of time while their businesses were closed. So when your covered period ends, then what you do is you have a certain amount of time in order to request that information. You have basically 10 months with the SBA. You have a 10-month time from the end of your covered period. So your covered period is going to define it from the very first day that you received your funds. So if you received your funds on, okay, let's just say January 1st, which wasn't possible, but let's use that date. And you used a covered period for 24 weeks, that's 168 days. So from 168 days into the year, which quick math is around the 15th of May. Then from that, the end of your covered period, you have 10 months in order to get that information. And this is for PPP1. I haven't seen the official rules on PPP2 for 2021. So you have 10 months to get it to your bank. I would get it in sooner than that. Your bank then has a few months to get it to the SBA, and then the SBA has a few months in order to actually get it done. So that is our wonderful 10 months. When is SBA going to start taking applications for the Restaurant Revitalization Fund? We anticipate it's going to be on April 30th. Now, that's just a guess right now, but it is close. And again, there's going to be a pilot period of 7 days when certain businesses are given the opportunity, and these are going to be that meet the social and economic disadvantaged businesses. And plus, there's going to be a 21-day period that those individuals have once the portal is open, kind of an exclusivity, something like that, for 21 days, of which they can actually be the first ones in. So it's going to be soon, but I think everything's going to get a timestamp of when you actually file. And even though you might not be in a social or economically disadvantaged group, once they get through getting those requests done, then it's going to go back to when people first got in, is my understanding. Okay, this is our next question. It's kind of a longer one, but let me try to, okay, so here we go. I understand this may seem contradictory, but according to some preliminary input, it seems that our establishment, which is a restaurant, is eligible for much more than we need at the moment. Now, if the virus continues to spread and we see a surge coming up sometime down the road and are forced to close again, we may need to use those funds. But if things continue to improve and our restaurant pulls in cash flow, et cetera, can we opt to take less? I haven't read anything that leads me to believe that's an option. That is a great question. I like that question. I don't have an answer because I don't think it has been addressed yet. But I kind of think that there's going to be, once you're certifying, making that certification that you've done, and I think that there's going to be a lot of restaurants or food businesses that are in your particular shoes. Hopefully everything bounces back quicker. So I guess my question is that there's two things. What I would probably do is I would accept the grant and I would be able to use, and I would, because you remember there's a lot of accounting that really needs to go into each and every one of these grant programs. And this is going to be something where we're going to talk about in the upcoming weeks, could be as soon as 2 weeks. And we're going to be looking at a lot of the tools that are available to kind of keep all the expenses straight so you don't duplicate expenses in between programs. So really this audit proofing your particular grant fund is important. And if you find out that you get a $300,000 grant and you think you only need 75,000 of it and you use 75,000 of it, I would spend 75,000 if it was me. And then I would contact them and tell them that my business has improved and I don't need any more of it. And I'm sure they'll gladly take it back. And I'm sure they're going to get a lot of these funds back. So I would, until we hear something more concrete on this, and there will be some interim final rules and there will be some more guidance that becomes available, is if you think that you could use some of the funds, but not all of them that you would qualify for, I would actually go in and qualify for those, account for them, and then send the money back that you don't need. And I'm pretty sure that there will be, because there was for PPP and other pandemic programs, ways to actually get the money back. Okay, that does it for the Q&A box. Let me jump now up here into our wonderful chat to see if some things ended up in there. Okay, here's one in the chat. We applied for the California Relief Grant in January during the very first round. When we log in, it says documents are still pending, even though we have downloaded all the required documents, including the bank numbers, tried many times to download and won't take. There could be a glitch. Can we talk to, or what I would definitely, and Greg, you just saw in the chat box, thanks to our phenomenal marketing guru, Maureen Busher-Dang, a comment that says, there's the Lindustry customer care phone number. Definitely call them or email them. And I'm assuming if you're getting bank requests, then you have been notified that, yes, you have likely been funded, and then you go through the second step of the application process in order to provide the necessary documents, including the bank statements and bank routing numbers and some of the other things that they require as their due diligence in order to avoid as much fraud as possible in these programs. Okay. Oh, we have a self-employed contractor question. Those are always my favorites. Well, I do see we do have the EIDL map. If you're interested, it is in the chat now. You can go in and grab that. In the self-employed contractor, if I apply for a first-time PPP loan, can I distribute pay to myself on a monthly basis to minimize canceling out weekly PUA payments? Good question. Of course, you can't duplicate those. And so I guess what it would come down to is the difference between your, I believe you can, and that's how I would treat it, is if you're PPP, which you're entitled to essentially, 2.5 months of your pay as a contractor. And if you're a Schedule C operator, and let's say your Schedule C on line 7 now, since you're first applying for PPP, shows $100,000, you're going to get a $20,833 PPP if you are eligible. So that said, that $20,833 is without employees. It's just for you. And you can show that over a 12-week period of time and show that. And then what I would probably do is, if it was me, I would probably take that and repay your PUA unemployment. Or what I would do is I would look at, because I'm pretty sure that you can't do both. It's been so long since we've actually addressed this question. It was last year sometime. But I don't think you can have both. So if your PPP, 12 weeks of it is substantially higher than your PUA, I would take the difference, or and I would seek more guidance on this. I don't have a great answer for you right now, but I think what I would look to do is I would look to see if I could, if my PPP is somewhere around $1,200 a week and I'm getting $700 a week from PUA, that $500 is kind of the sweet spot that I would be looking into seeing if I'm eligible to retain that. Okay, Greg's followed up with, he has not been funded and does not. I would definitely get a hold of Lindustry. The good news is there's a $750 million round if there is a problem with your application there, but definitely call that 888 number, and I would call them before they open up next week. So definitely do that. And yeah, thanks for the questions. Well, that's gonna do it this week. We'll be back next week. So, I have 3 more questions. It's not going to do it. I forgot my emailed questions. So, okay. If you're a one-person corporation and have no employees, how do you fill out the application, as a corp or as a sole proprietor Schedule C contractor? Okay, so if you're a corporation, you're probably most likely an S corporation. And there's a big distinction, if I recall, between an S corporation. Now, it's been a long time since I've been a corporate tax accountant, but there's a big distinction between a S corp and a single member LLC entity. And your corporation will file a corporation return, and your K-1 will go directly to your Schedule 1040. So you avoid the Schedule C, so you would need to file as a corporation. Now, if you're a single member LLC, those expenses, since a single member, one person LLC, is not really it's kind of a, what do they call that phrase? Kind of a disjoined entity, something like that, disconcerned. So it anyway goes to the Schedule C, to where you could file as a Schedule C filer. Next question is, if you were a sole prop in 19 and converted to a corporation, how do you fill out the PPP app? That's a great question for your lender. I think lenders treat this differently. And, lenders have they know how to answer that particular question. So what I would do is make good notes of that. If you're filing online through a fintech, I would probably call and ask a question on how they like to see it treated. I think a lot of people, and I think this question came up in the restaurant, and they were, or even maybe even the Shuttered venue last Thursday, and they said initially, what you need to do is, so it shows that you have income from 2019, is to file initially as that sole prop, but really your lenders, and I've seen lenders do it differently. So I would check with your lender on that. And as far as the PPP loan increase for sole props from the new calculation on March 3rd, we kind of touched that. Whereas we're hoping that they do a retro for all the people that got in earlier and didn't get the kind of step up in award size for the PPP, but there's nothing on that yet. Okay, so now that's a wrap. So great to be here again for number 58. We'll be back next week. Keep your questions coming. We'll be here tomorrow with the Kern County Hispanic Chamber and her Kern County Black Chamber and Mid-State Development with our EIDL expert. And we'll be back next Wednesday. So everybody have a great and profitable week. We will see you then. Take care, everybody.